Hey everyone, welcome to the first video. My name is Jens, and in this video, we're gonna go through the basic steps of everything you need when it comes to sci-fi and trading this strategy. Now, let's dive straight into it. First, I want to go over the steps that you already should have taken by the time you're at this video. So, the previous steps are pretty simple. First, we have, of course, the goals. So the goals is done on the launch on the community website. So on the community website, you'll see the launch. We have some videos about goals, about why. You'll have a form that you can fill in to actually clear or create clarity about where you are going and why you are doing this, because that's an important factor when it comes to this journey in this amazing academy. Now, then of course we have the second step, which is the foreign exchange page, also on the community website. What you want to do there is, of course, you want to it refers to im.center. You want to watch the basics in the im center page, and of course you want to watch all the other videos on that page on the community website as well, because those videos will give you more insights on some important aspects that you need to know of. Then, of course, you have the strategy, and that's the step where we are now. And the strategy we are choosing is SIFI. Now, to give a quick breakdown of the SIFI strategy, SIFI is a strategy that focuses on the trading the trend, so a trend continuation strategy. Now, I'm drawing a trend right here, and if you look at a trend, where do we want to take advantage of an uptrend in this case, and where do we want to buy the uptrend? We don't want to buy an uptrend here. We want to look at these zones, and that's what a lot of trend trading strategies do. They just look at, okay, where can we enter this trend, and where can we capitalize as much as possible? And that's, of course, in this zone. Now, how we're going to determine the zone is something I'm going to talk about later, but we just want to know that we are focused with SIFI on the 4-hour chart. So we're not going to trade on the 4-hour chart, but we are trading only the pairs that are trending on the 4-hour chart, if that makes sense. Okay, so we're looking at a more long-term trend to then enter the trades on the 30-minute time frame, on the 1-hour time frame, etc. And that's what you're going to see here as well. Let me refresh this because there is still a setup on the screen. So what we're going to see here as well is we have an alert panel. And on this alert panel, you'll see that when we are in an uptrend on that 4-hour time frame, you see that we have a green background, right? So this is a 4-hour uptrend. Now, once the 4-hour uptrend is done, you'll also see that the green background is not there anymore. Same for downtrends. What we'll see is we will get a red background when we are in a downtrend on the 4-hour time frame. Here you see the alert panel, and you'll see the M30, that's the 30-minute time frame. You'll see the H1, this is the 1-hour time frame, and then you'll see all the different pairs you can trade. You can trade forex pairs, you can trade exotics, you can trade crypto, you can trade metals, you can trade whatever you want to trade, but we're focused mainly on the forex pairs. Okay, something important is, of course, your settings. So the settings you can see here at the top, you want to have your settings set up the right way, and this will make sure that you get alerts. So you want to check off the FX box, and you want to check off the M30 and the H1. Okay, so that's an action step that I'm going to write down right away. Action step is you want to make sure that you have those settings. You have the FX checked off, you have the M30 box checked off, and you have the H1 box checked off. Now, for more information on SIFI itself, you can also go to the training tab at the top of the scanner. And inside that training tab, you'll get more information on how to use the scanner. That's the pop-up tutorials. And in the English video tab, you'll also see some other videos. Not everything that's discussed in these videos are things that we're using actively, but it is how this scanner is built. So it's important, or it's interesting to watch these videos. If you like to watch these, that's an amazing idea to do. But then that brings us to the next topic, of course. So the next topic is the reasons for entry. So we talked about the previous steps. We have one action step already. That's what you want to do right now. Now let's continue, and let's look at the second thing that I want to talk about today. and that is, of course, reasons for entry. So reasons to enter a trade. We have a 3-step simple system that verifies if we want to enter in a trade or not. Okay, now let me just this right. So the first thing that will happen when we're trading is, since your settings are set up, the first thing that will happen is you will get a notification. So you will get a notification on your phone that there is a dark arrow or a light arrow. So we have dark shade arrows, we have light shade arrows. The dark shade arrows are the ones that we want to trade. So dark shade arrows, and of course, light shade arrows. Now the light shade arrows are more opportunities, but less accurate. The dark shade arrows are less opportunities, but more accurate. I like to spend less time, so less work, and be more accurate, more profitable, right? So that's what we're going to do. Now, before we enter a trade, of course, it's important to know 2 things. First, Monday is trap day. We are not trading on Monday. And then second, of course, is the news. Always be aware of the news. 1 hour before and 1 hour after the news is no trades. So you can do one of 2 things. You can just choose to not enter a trade 1 hour before and 1 hour after. That's something that I would never do. So when we have big news events, you can visit the forexfactory.com website. Big news events are the red folder events. And of course, you want to take in consideration the orange folder events as well, but it's mainly the red folders. And of course, right here, you can have a filter. I don't know if you can see this. Just above graph, you have this filter where you can filter out on the red and the orange ones. I prefer that because otherwise it looks like this. I rather just have my orange and red folders because that's what's important to me. So that being said, we have our Forex factory set up. So we're ready to do or to go and to take in consideration the news. Now, inside the scanner, we also have a news economic calendar. So that's also where you can see the news, of course. You can even filter that as well. You can choose high and medium only. So that's the red and orange folder news. And you'll have basically the same information. Okay. So that takes us to the 3-step simple system. Now, our 3-step simple system for entry is, of course, 3 steps. And like I said, the first step that we're taking is we're looking for a dark shade arrow. The good thing is we get notified when the dark shade arrow is there. So we don't need to spend much time on looking where the arrow will come, or is it already there, or whatever. And so, right? So that's a good thing. Now let's go to one of the pairs that we traded. I believe we had a great setup here. Yeah, cool. So these arrows, this is a light shade arrow. Here we have a dark shade, a dark shade, a dark shade. These dark shade arrows and these light shade arrows will give us a notification. And that's an important thing to take in consideration. Now, the second step is what we're looking for to know if this is really an arrow where we want to, dive deeper into. If we want to have a 2-day pullback. So the 2-day pullback will help us to make sure that we are at the right place in this uptrend, for example. Of course, we want to take advantage of a trade right here in this zone that I talked about. But the only way to know that we're in that zone is if we had a pullback before that zone, right? And we are what we do with SIFI is we look at that and we look, okay, did we have like 2 days of pullback? And that's what we see right here. Is, for example, these 2 arrows that happened within this day. The day starts right here and the day ends right here, right? That's where the vertical dotted blue line is, that's where the day starts and ends. So the 2 days before these arrows, did we have a pullback? We have one pullback for sure, but right here, it's more of a consolidation. The day opened right here and closed right here. So I'm not really looking to get in a trade on this day, on this particular day. Now, if we then look at the arrow that we got here, that's also a notification we got. Amazing. Oh, I don't know what just happened. I clicked the wrong button. Here we go. We're back. So on this notification, for example, this arrow, so what we see is, did we have a pullback the day before? Yes, we do. Amazing. Did we have a pullback the day before that? Yes, we do. Amazing. That's a valid 2-day pullback. So that's what we're looking for. And that's exactly this thing right here. Then from there, the third step that we want to look at is, okay, are we at a point where the market will start to reverse and go back to the upside? So are we near the end of this pullback? And since we are having a pullback for 2 days, statistically seen, most pullbacks will only average 2 days, right? So that's a good confirmation. But the next step is having that reversal pattern, having that M or W to take in consideration. And that's the reversal pattern we'll be looking at. Now, what will an M or W look like? An M or W can look like a lot of things, but most often you will see an M, for example, like this. You can see an M that is like this. Or you'll have a third one, which is my personal favorite. It's one that goes this way, okay? Why is this my personal favorite? It's because of one reason. Right here, we have two lows that are equal lows. Okay, equal lows, there's nothing bad about it, but it's not that strong. Right here, what we have is we have a low and a lower low. This is the least strong out of all of them because we're still creating lower lows. Okay, so chances are we're going to continue lower. Then what we see here is we're creating a higher low. And this is what we're looking at, because since we're in that, period of going down, this small down movement for the last 2 days, we want to make sure that, in these last 2 days, we're creating lower low after lower low after lower low because we're going lower. So we want to reverse that with this reversal pattern, and that's why we're looking for a higher low. Another thing you're looking at to have a good W or a good M is making sure that this neckline is broken right here. Okay? So that we went higher than this line right here. That we went higher than this line right here. That's another thing that we will be looking at. Now, if you look at that on the chart, what does it look like? You can see it very clearly. This is an amazing, amazing example. We go down, we come back up, we go down again, and we go back up. Okay? Then we have our arrow. And what will happen a lot of the time, more often than not, it will break our neckline that I was just talking about. This is the line that we're looking at, right? It will break this line with the candle of the arrow. That's an amazing confirmation that we have. And then from there, we can take a look at buying this market and, placing our stop loss and stuff like that to then continue and make profit to the upside. Okay. So that being said, we covered, and this part of the video, of course, we covered, let me just, yes. So we covered when to trade. So we don't trade on Mondays. We trade on Tuesdays, Wednesday, and Thursdays. And then on Fridays, you can see some more plays coming, but the best 3 days are the middle of the week. Okay. Then news is important to take in consideration. And of course, these 3 steps are pretty simple and pretty straightforward. One thing that I like to show you as well is another thing on that reversal pattern, which is really powerful because it's not easy for people to really see like, okay, when is this a good M? When is this a good W? And this is just something that can more, let's say, rationalize it or something. I'm going to show you this right here. Let me scroll through. Yeah, this is an example of a perfect M or W. So what we want to see is not only that the low is a higher low, the second low, right? But also that we have two candles down, two candles up, two candles down, two candles up. You can have three, you can have four, that's fine, but the minimum is two. If we only have one candle in one of those legs, it's not really a good M or W. Like right here, for example, it's a bit choppy, right? For example, here, it's not that clear. This one is more of a V bottom. That's not what we're looking at. It's not that clear. Right here, you have the thing is going up everywhere, like, you know, so we want to have those clear, beautiful reversal patterns because these confirm that we're going to reverse. That's why it's a reversal pattern. Okay, so that's also what you see here on the chart itself. To say the last thing about it, I'm going pretty deep on that reversal pattern, but it's important, so that's okay. You see at least two red candles down. You see even more. Here, the last three are three in a row. Then you have at least two candles up. You know, four in a row. Amazing. We have three candles down. That's three in a row. And then right here we have two, but that's not the two that we're looking for. And then we have one. That's also not the one we're looking for, but the confirmation is here. We have at least two in a row right here. Okay, so that's a beautiful up move. To confirm that, W. Okay, that being said, we covered everything on the entry reasons. Now the next step is, of course, to also know, okay, what's our stop loss, what's our take profit, and how are we going to go about that? So if you're not really following at this point, I would say like, hey, pause the video here because we're going on to the next topic and rewatch the last part. But I think we're pretty clear, so let's continue. Our stop loss is going to go below the low of the market. So the low of that whole pullback. If I'm taking a look at that pullback, our stop loss is supposed to be below this low. Okay, pretty simple. Now we're not going to just place our stop loss exactly below the low. So that's something we could do. Let me just check, where is that wick? That wick is right here. So we could place it here, right? We're going to give it some more breathing space. How are we going to do that? We're going to add to our stop loss our spread times 3. If you don't know what the spread is, you definitely should go back to the basics. Your spread is, of course, the difference between buying and selling, the whole thing. But basically, let's just throw an example in here. Let's say your spread is 0.5 pip. What we're going to do is we're going to do that times 3. 0.5 times 3 is 1.5. You're going to add 1.5 pip or pips to your stop loss. In this case, we have a stop loss of 21.1 pip. So what we're going to do is we're going to make that 22.6, somewhere right here. This will be our stop loss. Okay, so that's, of course, where were we? We're here. Cool. I'm writing everything down so you guys can also take time to take those notes. So stop loss is based on structure, right? This is just based on market structure. In an uptrend, of course, this will be below the previous low, aka the pullback. So that's the end of the pullback. And what you're going to do is you're going to add your spread times 3. For a downtrend, there's the same story, just the other way around. Above the previous high, aka the end of that pullback. And then, of course, add your spread times 3. Cool? That's pretty simple. Now, the good thing is the take profit is even more simple because the take profit will be placed at a 1-to-2 risk to reward ratio. So you're just dragging this up until you see a risk to reward ratio of 2. Meaning that if we're risking 2% on this trade, we're going to potentially make 4% on this. Okay, so target. Amazing. The risk to reward is 1, 2, 2. And then, of course, our trade management. That's the last thing about this part of the video, is the trade management, which is important. Your trade management is pretty simple. You just want to have two things in order. First is you want to be aware of news. Again, you pull out when 1 hour before the news hit, and also 1 hour after. You don't want to enter any trades. So any arrow that's coming on the news is not valid. 1 hour after the news, not valid. Anything after that can be valid. Then, of course, trade management, again, what's also important is once we reach the 1-to-1 risk to reward mark, what we're going to do is we're going to go and set our trade break even. Go break even. This just simply means that we're moving our stop loss to our entry zone. This will secure our trade, and this will make sure that we don't potentially lose when we were already in profit, right? The worst thing that can happen from there is that you are not making any money. The best thing that can happen is that you are making profit. But at that point, you're not in any risk to lose anything. And that's the most important thing. Right here, we came pretty close to take profit, to break even. Sorry. I didn't get stopped out right here because right here is a 1-to-1 risk to reward. So once we hit this point, that's where we hit our, let's say, take profit, not really a take profit, but that's where we hit our mark of going break even. So this was the break even mark. I often mark it up like this, go break even. And that was hit right here. Then it came back to the entry zone, and maybe it hit, maybe it didn't. You know, in my case, it didn't. So I just stayed in the trade because my stop loss was not activated right there. And then, of course, it continued to the upside to our, profit and beyond. So that's basically anything you need to know on stop loss, target, and trade management. That being said, I want to go to the next topic, what I want to talk about. That's the third topic for today. Of course, we talked about the entry reasons. We talked about the orders, so the stop loss, the take profit, trade management. And from there, I just want to go to what's really important is your risk management and your risk calculation. So we know by now that when we're entering a trade, the first thing that happens is we get a notification, right? I get a notification on the phone. I'll check it. Okay, amazing. The second thing that we check is our three-step system, our simple three-step system. And that's, of course, first was the first thing was the arrow, which is a dark shade. The second thing was the 2-day pullback that we have. Pullback. And the third thing is, of course, that reversal pattern, the M or W. Once we are there, now we have to place that trade. How are we going to place the trade? Pretty simple. We're never going to risk more, and that's the risk management part that I wanted to talk about. Always risk max 1 to 3%. So let's take the example of 2% risk. If you lose 2%, you have 100 euro in your account, you make a loss, you're at 98 euro. That's no biggie. That's not a problem, right? It takes like 2.1% profit to go back to 100 euro. But if you do this the wrong way, and let's say, I'm just going to move it here. Let's say you make a big loss. Let's say you lose 20% of your account. You go from 100 euro, you go down to 80 euros. What happens? To go back to 100 euros, you need to make 25% profit. So you made a loss of 20%, but it takes you 25% to make up for that loss. Okay, so it takes more to go back to zero to your starting point than it took to go down. Now let's make it even more extreme. Like let's say we lose 50%. That's where we go from 80 euros, from 100 euros, sorry. We go to 50 euros. Now it takes us 100% to make up for that and go back to our initial €100 account just to not, then we're not even making any money, right? We're going from 100 to 50, we lose 50%. But then to go back, it takes us way more. And I'm going to repeat this one more time for the last exercise, because 90% of traders lose 90% of their capital in the first 90 days. Why is that? Because they're not keeping their risk management and they're not well educated. Now, we have the best educational platform there is. We have the tools, the scanners, everything you need to crush it and to win in these markets. But not a lot of people have access to that. That's why we share this so passionately, right? So let's say you lose 90% in the first, whatever, and you go from €100 to €10. It now takes you 1,000% profit to go back up to €100. That's crazy. You lost 90%. It requires 1,000% profit to do the same thing again to go to that break-even point. And that's why we go all the way back and we only risk 1 to 3%. Okay. Now, that being said, of course, you also got to know that it's important to ensure that you have a sense of accuracy. Okay. So when it comes to your risk to reward, your accuracy, we know that risk reward, we are trading 1% risks for 2% rewards. So that's 2% risk will brings us 4% rewards for every trade. Now, let's say if you look at SIFI itself, SIFI is 80% accuracy, right? This means that when we have 10 trades, we will have 8 wins, 2 losses. In this example, 8 wins will give us 32% profit, 2 losses give us minus 4%. This is a total 28% profit, which is crazy, right? Now, this will only happen in your trade account if you are fully capable of learning the strategy and applying that strategy to your trade account exactly the way you taught it and exactly the way you should. And that's the dangerous part about trading, of course, is a lot of people, they don't stick to their plan, they don't do what they're supposed to do, they get all emotional, they have no clear trading plan, and especially no good risk management, right? And risk management is one of the most important things when it comes down to trading. Now, you don't need to expect to be 80% accurate from the beginning. You're probably not going to be 80% accurate from the beginning. Maybe you're 60% accurate, maybe 70, maybe 50, maybe 40. And I'm going to show you that even with 40% accuracy, you can still be profitable. It's important to know that even if you place 10 trades, and let's say you are 60, let's start with 60% accurate. That's 6 wins, 4 losses. You'll probably not be happy if you look at it from an emotional standpoint. She'll be like, yeah, but I'm losing 4 times, and you're getting emotional. That you're not supposed to be emotional, right? Because 6 wins bring you 24% profit. And 4 losses will be minus 8. This brings you to a total of still 16% profit, which is insane, right? Now, let's say it's even worse. Let's say you start and you have less than half of your trades right. So you place 10 trades and you have 4 wins and 6 losses. Doing 4 wins will get you 16% profit. Doing 6 losses will get you minus 12. You still have a total of 4% profit after those 10 trades. It can take you a week to do 10 trades. It can take you 2 weeks to do 10 trades. It doesn't really matter. What matters is you are only 40% right, so you lose more than you win, more of the trades, but you're still making profit. That's an important key element to know when it comes down to risk management. And to ensure that you're only risking that 2%, because this whole story can only work if you are risking 2% for every trade and if you are rewarded 4% for every trade. So to ensure that you want to go to the scanner, and of course, this is what we talked about earlier, and you can just scroll up to the top and click on this calculator. If you look at this calculator, you can fill in whatever your account size is. Let's say your account size is a thousand euros, for example, right? You can fill that in. Oh, let me just see. Yes, here we go. I don't know, my laptop is not charging. I have no idea why. Just give me 1 second. Okay, we'll have to finish this video off quickly then, but that's fine. So let's say we have a thousand euro in the account. We risk with 2%, right? That's $20 of risk. We're trading the GBP CAD, and what we do is we just fill in the entry zone. The entry zone is the gray price right here. This is 1.79677. The stop loss is the red price we see right here. It's 1.79450. You just click calculate, and now you have the stop loss that you want to use in your MT4 or MT5. And MT5, of course, you can also calculate it on the chart itself, which is a handy thing as well. But you can also do it inside the SIFI scanner at the top at the calculate. Okay. So that being said, we covered risk management, how to calculate your lot size, and that brings me to the last topic. But before I do that, I would like to have my laptop charged. I don't know what's going on. It's not charging for some reason, but I don't know the reason. Sorry for the inconvenience, guys. You might want to scroll through like for 5 seconds or something. Okay, whatever. We'll have to do it. What we got? Oh, here it is. Anyway, I really don't know what's happening. Okay, it's charging. That's a good thing. So going back to the last topic, excuse me for that, guys. So the last topic is the trading journal. So the trading journal is one of the most important parts when it comes to trading, because your trading journal is actually what will help you to reflect on your trading journey, to make sure that you're doing the right things, and also to, you know, give some tips and tricks and lessons to yourself. So if I look at this trading journal, I'm just gonna pull up the template for you guys. This is a trading journal template. I'm gonna show you how you can fill this in. So let's say we're placing some trades. We're here on SIFI, and this is a trade that we are placing. Cool. What I'm gonna do is I'm gonna open this up, and you'll get the link of this document. You can go to the right hand corner, and you'll see like the duplicate button. You can duplicate that to your own page, and then from there you can go and use this journal. On the first page, you'll see a clock, you'll see a button to open a trade, you'll see some information that you always want to double check. In the middle, you have the result, the percentage gain. At the right, you also have a result, more of a exact profit, your win ratio, and you can also fill in the starting of your personal account. So let's say you have 500 euros or 5,000 or whatever. I'm going to put this at 1,000 because that's the example we're using here. And then the not trade pairs. So these are also pairs that you don't want to trade. So that's some the information there. That's what you see right away. Then when you scroll down, you have 3 other blocks. You have your risk management. You can personalize this as well. You have your trading plan. You can personalize this too. And then you have the database with all the trades that you took. And then from there, you can write down some notes in this strategy plan. You can check it out. This really helps you to see all the details of SIFI. And then, of course, right here, you see the most important lessons. So I like this, and I made this especially because at the end of the week, I like to look at, okay, what were the lessons of this week? At the end of the month, I might not remember what were the most important lessons that I learned this month. And there's no purpose in writing down a lesson and not really learning from that, or not really, you know, being reminded from that. I'm gonna delete this one really quickly. So there is no trades here right now. So there is no data. What we do is we click on open a new trade. And when we open a new trade, of course, we're going to look at what is the trade that we're looking at. We're looking at GBP CAD. So GBP CAD in this case, when did we open the trade? We opened the trade on the 26th of October, I believe. And if we include the time, it was at 5:30 in the morning. So where do I see that? If I just go over the chart, I'll see where the arrow is. At 5 in the morning is where the arrow started. This is the 30-minute time frame. So the next candle is at 5:30. So that's where we entered the trade. Now then from there, what you see is the type. So I just have my account here. That's €1,000. Cool. And then the strategy is SIFI. The chart that we can incorporate in this is we just go to the chart. We click here for a picture, and then we copy the link. Once we copy the link, we just enter that link right here in the embed section. And then from there, you can just fill in, is this a loss? Is this still pending order? Is this an open trade, or was this a break even? In my case, this was a win, and we took 2% risk. So that's the risk percentage. Then the realized risk to reward is always 2. Usually it's always 2. Or maybe when it's a break even or you pulled out because of news, it can be anything different. But normally you're trading a 1 to 2. So you're just filling in the number 2. The percentage gain will then naturally be 4, because if we're risking 2% and we're making 2 times 2, 2 times 2 equals 4. Then the realized profit or loss is in this case 40. Let's say you make a loss, you will just fill in minus 20. Okay, so for you guys to know, but in this case it was 40. So there is no minus needed here. And then the account balance, if we start at 1,000 and we make 40 in profit, we'll have 1,040. The journal is where we can share some thoughts. We can share some emotions. We can share the steps that we took. We can share whatever that you want to share in your journal. Of course, for more information on how to really journal and what to write down, you want to go to Go Live sessions and go deeper into journaling trades, trading psychology, and stuff like that. And then the most important lesson is the key lesson / question that you have, or that you took away from this. Then, of course, we have an order. This was a bullish one, as we can see. The background is green, so we're only looking for buys. And yeah, then the last checkbox is, was this a successful execution or not? So sometimes you'll have a loss. That's a successful execution. A successful execution just means that you would take this trade every day of the week. Every time this trade comes, it's a trade according to our plan. And that's really important, to only take trades according to our plan. If you didn't, then of course you don't check this off, then you just leave it like that. But in this case we did, so we can check this off. The goal is to have all your trades checking off that checkbox. Of course, you can filter this so you can see it afterwards, like when you don't follow your plan, how much are you losing and stuff like that. That's things you can use in here. But that's however you want to use it for yourself. Here we see our key lessons and questions, like I just wrote down. And that's basically it. So this is how we're going to use that. This is basically your bookkeeping of your trading business. And this is the most important part when it comes down to reflecting for yourself and to, really winning with SIFI. And especially if you want to grow in your accuracy, it's important to have this and to learn from your mistakes. That brings us back to TradingView. We talked about a few different things, of course. Oh, we talked about different things. We talked about the reasons to enter a trade, right? That's what we started with. We talked about Monday or trap days. We talked about the 3 steps, our stop loss, target, and trade management. We talked about the reversal pattern, the notifications, the risk management, the risk to reward, and the accuracy, and why that's so important. And then, of course, everything within this scanner as well. So that being said, that's the whole video. And again, the last thing that I want to say before ending this video off is, don't underestimate how blessed we are with a company like this, where all the educators and education is certified and tested. Don't take for granted the fact that there's been years of development in these SIFI scanners. as or in the scanners that we have. The accuracy of these tools are insane, and for us it just looks like some arrow, but there is way more to it than just some arrow. It saves us hours of researching, so take advantage of that and just follow those 3 steps, and you'll see that it becomes highly profitable. That's maybe the last thing I can show you guys is the overview of the first few weeks of doing this. And the first few weeks of doing this, you see that um, I have the same journal as you guys have. We made 74 euros in profit, starting from a 1,000 euro account. The win rate in this case was 74%, which is not perfect. You know, usually we're about 80% accurate, but we had some heavy news trades where we were in a trade that we weren't really supposed to be in. So that's why we're not 80% accurate. But again, I just showed you guys that 40% is more than enough to be profitable. Right here, you see all the trades, every trade we took, the minus, the plus, the everything. And then, of course, we have the biggest lessons that we learned from that. So this is how your journal will look like in a few weeks when you're really applying what you learn here. And I can open anything up. Like if you open this up, I filled it in completely. You have the trades right here that we took, and you see those steps line up. 2 days of pullback, an amazing reversal pattern, and then we go up. So that's basically what it is. Same thing for the losses, because of course we took some losses as well. Then you also see what that looks like. That will happen in your journey too. So that's basically it, and that's what I'm gonna finish this video off with, and I'll see you very soon. Of course, I wish you the best of luck with SIFI. I wish you the best of luck trading this strategy, and let's create as much success stories as possible. Let's share this strategy with the world, because we know the world needs it. And yeah, I'm excited, I'm pumped up, and I'll see you guys in the next one. Bye bye.